March 25th, 2024. I thought the close of today was very important because of the daily chart. A lot of times when you get a pair of bear bars, we had consecutive bear closes. If you get a third one, you'll end up basically just getting a dump because bulls will give up after 3 consecutive bear closes, but they don't necessarily give up after 2 closes. And so I thought the close of the day was really important. And it was kind of a conflicting close. The market closes at 4 p.m. Eastern Standard Time, 2 p.m. where I am. But if you look on the daily chart for SPY, which is the official New York Stock Exchange, it's a bear close. You can see that. But if you look at the 5-minute chart, this close was at 67. You can see the close was at 81, and the open of this was at 25. So it's supposed to be, the open of this was at 79. But on the daily chart, it shows it closed at 77. So, I'm not sure. It's some sort of doji bar either way. But, just call it, I would just suppose I would just say call it whichever. But either way, some sort of chance we get a dump tomorrow. But, probably just another sideways day. We've had really sideways and small days recently, a couple of 15-point ranges. So really hard for stop order traders until maybe the end of the day today. But even the end of the day was not all that great. Bar 1, big tail on the top, big tail on the bottom. Not all that great for stop order traders. Bar 2, a bear bar closing near its low. But do you really want to sell? I would say, 30% chance it's the high of the day. Bears are selling, hoping for a second leg down. Bulls are hoping bar 1, buyers, and we get back to the low of Friday and close the gap. But probably more buyers below 1 than sellers, probably buyers below 2. But you are buying kind of high in a range, buy below that. So it's a credible swing sell, but it's just really not all that great. And then you get a big follow through bar on 3. Bears able to make 4 points, not able to make 5 points below 3. You can see not able to make 5 points, but we're able to make 4 points. Below 2 during 3. But probably buyers below 1. You can see big tail on 3, disappointing. Bar 4, a lower low double bottom with bar 1. Potentially a reasonable buy, but a big bar, so big risk. Traders might look to buy a pullback, but you can see we didn't end up getting it. You know that we're probably going to get a couple legs sideways to up, but we might get a pullback and a higher low before we do that. We got follow through on 5, but it failed to break out of the 1 high, so not as good as it could be. A doji bar on 6, kind of bad follow through, just really not all that great. It's a potential 1 bar final flag for the bulls, but I would just rather pretty much be flat at this point. 7, a bear bar testing the 4 high, the breakout point, and we ended up getting buyers on 8. Bears wanted 7 to be a higher high double top, or a higher high double top. And it's really just an expanding triangle, the 1 high, the 1 low, the 4 low, the 5 high. So it really just looks like an expanding triangle to me. A lot of sideways trading. And you can see bulls bought the close of 7, not letting it trigger. So ended up rallying to a new high. 8, again, failed to break out of the high of 5. It's a couple of pushes up. So you could argue the 1 high, the 5 high, and eventually this high ends up being a wedge. Big follow through on bar 9, but again, big tail 8, big tail 9. This is really not that great. We're probably getting to yesterday's low, but I'm not sure when. We could definitely pull back first. And then 10, a bear bar, but not a very strong close. You want to sell below 10? Probably not. You want to buy above 10? Probably not. It's a bear bar, so probably sellers above, probably buyers below. This is really a limit order market. I'd rather wait to do anything. 12, follow through for the bears, but really not all that good. The 11's a doji bar, so we're probably going to test that 11 low, and we're in the middle of a tight trading range. 13, a bull bar closing near its high. We're probably always in long, and it is a bull bar, but big bar, big risk. Probably better to buy below than it is to buy above. And you're buying in the middle of a tight trading range. So a lot of problems with 13. Disappointment on 14 and 15. So you can see big tail 14, big tail 15. And you can see after the pair of bull bars, or after the pair of bear bars, bulls just gave up, and that caused 16. Again, probably part of the reason why it's counterproductive to buy above here and stop below here, or it can be at least. If you're going for a lot of reward, it might be okay. But a lot of times when you get down here, there's more buyers than sellers, so kind of difficult to do. You could buy here and buy more down there. So buyers below, like we said, during 16, they bought, and we start to get the reversal up. We now have 2 legs down too, which is really important. So 2 legs down from the wedge at 11. So we might start to go more sideways here. 18, a surprise for the bulls. And I thought it was important that 18 closed above the 13 high. You can see, so if you bought here and let's say you scaled in, what usually happens is when you get back to this price, there are sellers because the bulls bought here. They were disappointed in this. They bought more lower and they're selling out. Instead, what happened was the bulls, they bought here, they bought more lower, and then they saw 18 close on its high. And instead of thinking, oh, well, I was clearly wrong about this trade, I'm going to sell out, they thought, no, I'm right. They decided to buy more at this price during 18 instead of selling out of their longs. So bulls thought they were correct and they bought more, which is really important, meaning we might continue to rally, and we might rally above the wedge. Bad follow through on 19. It's really not all that great, but it's a doji bar, but does have a bull close, so it's more than minimum follow through for the bulls. Minimum follow through would just be a plain doji. Another doji bar essentially on 20, really not all that great. It's a double top for the bears with 11, but I would just rather be flat. Bad follow through on 21, and then another essentially doji bar 22, outside up, but big tail, so really less than optimal. 23, again, not really that great. Could be a second leg down. This is all just looking very sideways. This is just a tight trading range. And you can sit here and talk about high ones. This is a high two, whatever, low one, low two. But really, this is a tight trading range. So it's better to just be flat at this point. If you bought above 18, I don't know where you get out, but you get out somewhere in here, maybe during 22, maybe during 24, maybe during 23. You can see basically kept giving chances for bulls to sell out, and they kept doing it. Follow through for the bulls on 26, hoping to get an upside breakout, but a big tail, and you're in a tight trading range. And then disappointment 27, failed breakout above the top of the tight trading range 28. And then you get a disappointment bar 29, bulls selling out of longs. 30, a bear bar closing near its low, but a wedge 1, 2, 3, something like this. So a wedge channel essentially. We could easily test back down to the start of the channel down here, which is ultimately what we ended up doing, but we got there in an extremely messy way. Big follow through for the bears on 31, but this is one of those days where follow through ends up getting you end up getting bad follow through for anytime you get good follow through. So your good follow through gets bad follow through. And look, every move has lasted essentially two. You could argue 3 bars, but an inside bar, 2 bars, and then a failure. Really 1 bar. So is this going to be the big move? Probably not. 2 bars failed. So you get 2 bars here, and then you get 32. And it ends up being a failure. And then this 2 bars fails, right? So it's every move has been 2 or 3 bars so far today and then we get a pullback. 31, a big bear bar, but closing at the 24 low, which is the breakout point. It's okay for the bears, but let's see the follow through. It's probably not going to be great. And then you get 32, an inside bar, below 1 short, potential final flag. Disappointment 33, bears buying back shorts. Bears probably scalping, a lot of them with 2 points. You can see they were able to make almost exactly 2 points, a little bit more. So they're buying back shorts, causing 33, 34. An inside bar, disappointment 35, and then outside down 36. Double top, lower high 30, but really not that great. Fall through 37, but definitely could be better here. You need a clear breakout and you're not getting it. More follow through 38, but again, big tail, nothing that good. Outside bar 39, but bull close. This is just a mess. Reversal up 41, but really not great. The bar's too big bar, big risk, probably more buyers below than above. And anytime you think you see a reasonable stop entry on a day like this, you should think, if it's a bull bar, and you're thinking, wow, I should buy above that. It's probably just better to buy below it, or a 50% pullback of it. I assume bulls bought a 50% pullback of 45. Yep, that's what they did during 47. Especially the big bars, big bar, big risk. Buy below it, or buy the 50% pullback instead. So 45 midday reversal, maybe a wedge 31, 41, 45, but big bar, big risk. Bulls instead, they get disappointment 46. A lot of them sell over their longs. That causes the drawdown on 47, but they buy back at 50% pullback. And then we basically got a tight channel up, but you probably have to get out below 52. You can buy it back above 53, follow through 54. And then we basically got to the top of this channel, and this is the 18 bar range, right? And we got a failed breakout of the 18 bar range, an OO pattern. So potentially an okay swing sell on 63, but a tight bull channel up and a tight trading range, so maybe not as good. And you could have sold either one of these. Obviously, I'm half-assing this review, but it was just a very, very tight day. And this is one of those days where the moment it starts to do this, you should become very uninterested in trading. I thought 30 was an okay sell, but you get disappointed, and then it starts to do this. And at that point, you just, you turn on a TV show and you wait to see what you get. You wait for a clear breakout with follow through. You can buy 45. I thought you could buy 4. You could buy 18. I think 18 is really enough in the day that it's okay, but then it starts to go really sideways. You can probably sell 30, but you're selling in the middle of a tight trading range. Um, and 45, are you buying above 45? Maybe, but really big bar, tough decision. What if 47 closes on its low instead of where it did? What are you doing then, right? Are you getting out? Well, maybe, but there's probably more buyers below 45 than sellers. So this whole day was just a real big problem for the bulls. You can maybe buy above 53, but you're getting out below 57. So just all this really difficult outside 63, and then it just went sideways. And you can sell 67 for a move down. Probably better to wait for follow through 68 and sell that, but probably just get out directly above 72, and then you can sell again for 76. Essentially, vacuum tested the open of the day, which I thought was interesting because again, the bears wanted the bear close on the daily chart. So I don't know, where do we go from here? Probably pretty sideways. I'll be interested. We're probably going to get this high. So if we get to this high, the price 52, 46, 75, I would expect there to be a lot of support. So maybe we get there tomorrow. I'm not sure. We'll see what the gap looks like. But really just a couple of very sideways, very small days, 22 points, 17 points, 14 points. So a lot of, especially like today, just not a lot of good opportunities for swing traders. But, limit order traders trading all day, right? Buying below things, selling above things. Something I've been looking at. So like I trade stop orders exclusively with actual position sizes, but I trade limit orders with like one share, like one SPY share sometimes, just to like mess around. And, I think that, it helps me understand more when I'm starting to get trapped on a limit order trade. I think, oh, maybe this is a good stop order trade in the other direction. But like when you're in a tight trading range here, we were 1 minute into bar 25 and it was on its low. And it's like, we're 1 minute in, so we're 20% of the way through the bar. So do you think that this bar is going to get 5 times as big and close all the way down here? Probably not. Do you think it's even going to close down here? Pretty unlikely. And if it does, you just get out. So you can just buy down here, betting against a strong close. And in situations like this, oftentimes you're going to make your scalp. The same thing could have been done, 28 as it was rallying. You can just sell the market and bet against 28 closing strong. I wouldn't, it's tough to do. You could sell above 10, right? As the market traded above 10 during 11, you could have just sold above 11. And, if 11 is a bull bar closing on its high, great, get out. But instead you make money. So on days like today, that stuff happens a lot. But I'm definitely no expert on limit orders. That's just one of the trade options I've noticed. So whenever you're early in a bar and it's starting to make a move in a tight trading range like that, you can just fade it a lot of the times, I would think, and you just end up doing okay. But yeah, that's pretty much it. I don't really have a lot for today.